You're welcome to my channel. So in this video we are going to deal with another system, which is the payroll system. And briefly, the payroll system deals with employment and then payment of employees. So we are going to deal with things that have to do with paying employees and maybe managing employees. So we are going to look at the key activities. We shall look at the key documents and then the key accounts that are used in the payroll system. So these are the key activities, common documents or key documents, and then the accounts that are used in the payroll system. So the key activities, the first one we have is human resource management. Human resource management, it involves recruiting employees, soliciting employees, performance appraisal, stuff like that. Then timekeeping and then supervision. This is mainly done by the production department to supervise if everything is going well and all that. Then payroll preparation. This is done by the payroll section. Then payment of wages. Your wages are paid to casual workers. Your payment of wages, like you're supposed to pay them. Then payment of wages, salaries, and then deductions. Deductions, it's where we have things like NSSF and then pay. Then recording the wages, salaries, and then deductions. So these are the key activities in the payroll system. Then we go to the common documents. The common documents that are always used in the payroll system. We have the human resource records. These can record the names of the employees when they entered the organization and stuff like that. Then the checks, these are used while paying employees. Then we have the cash book. This one records the receipts and then payments of the organization. So it records when salaries or wages are paid. Then the general ledger, it also records the salaries, wages, when cash is paid or when they are paid through the bank, stuff like that. Then NSSF and pay deductions, like employees have to pay you, which is employment income, and then NSSF, they have to be paid. Then for that, another document is time records. Time records, it's that document. It's mainly used for employees that are paid on an hourly basis, like they pay them per hour. So the timely records record when those employees reported to work, then their time of departure and the number of hours that they have worked in a day. That is the time records. Then this payroll transaction file. The payroll transaction file, it records the transactions that take place in a particular period. It can be the daily transactions, weekly, monthly transactions that take place regarding to employees. So it includes the employee name, their identification number, stuff like that, their position and all that. That is the payroll transaction file. Then we have the payroll journal or listing. This is a report that is generated from the payroll transaction file. Then lastly, we have the payroll master file. This one includes information about every employee of the organization, their names, their identifications, their gross pay, their net pay, their deductions, stuff like that. So that's the payroll master file. So these are the common documents that are used in the payroll system. Then the accounts that are used, some of the accounts that are used in the payroll system, we have cash. Of course, sometimes employees are paid by cash. Then we have bank, sometimes they're paid by check. We have salary expense. Yeah, when you pay them, the salary expense is increasing, then the wage expense is also increasing, stuff like that. Then bank loan deductions, maybe they, like in case an employee got a loan from the bank and their salary is supposed to be deducted before them receiving it. Then accrued pay, we have pay because they are supposed to pay. Then accrued NSSF, stuff like that. So these are some of the accounts that are used in the payroll system, the common documents, then the common activities. Then we are going to the assertions, objectives, key controls, and test of controls in the payroll system. So this is how it's going to look like: the assertion and its objective, the key controls, then the test of controls. Yeah, hope you remember key controls by management, and it's the same as a recommendation or advice. Then the test of controls is by the auditor. So we are going to start with the assertion of occurrence. So the assertion of occurrence deals with making sure that something real took place, something occurred for real. Yeah, so the objective here is to ensure that the payment of wages, salaries is made only for work done and by existing entity employees, to make sure that employees that are paid are existing in the company, because the HR can pay employees that already left the company or ghost employees. So this assertion has to make sure that the payment of wages is made only for work done, like they pay them after working. It's the reason as to why companies pay at the end of the month, not at the beginning of the month. So payment of wages and salaries is made for work done and then for existing entity employees. So how can management achieve this objective? That's what we are going to look at. Then the common control for occurrence. Before you think of any other control, the first one is segregation of duties. Yeah, segregation of duties, and then we know the test of control for segregation of duties. The auditor is supposed to just observe to see if there is clear segregation of duties. So before you think of any other control when it comes to the occurrence assertion, the first one is segregation of duties. So let's look at the key controls that can be used to achieve this objective. Yeah, as I said, for occurrence, the first control that should come in your mind is segregation of duties. So management should make sure that there is segregation of duties, for example, between human resource management, like the person that manages employees is different from the person that prepares the payroll, and then is different from the person that actually pays the employees. Yes, so that will help to prevent overpayment of workers and then paying ghost workers or paying workers that do not exist. Because if you combine all these duties, like if human resource management, payroll preparation, and then payment of wages and salary is all done by one person, that person can easily manipulate things because they'll be knowing everything about the system. They can easily manipulate things and they end up overpaying the workers that they want and underpaying some, and then even including ghost workers that do not exist. So, as I told you, the test of control depends on the control. So for segregation of duties, the auditor is supposed to observe. Is supposed to observe and maybe discuss with management to see if there is proper segregation of duties, to see if the person that deals with human resource management is different from the person that prepares the payroll, and then is different from the person that makes the payments. So even though I do not rate that, the auditor is just supposed to observe and see if this is working properly. Then the second control that can be put in place to achieve this objective is authorization, to make sure that there is authorization of recruitment, remuneration, promotion, and dismissal of employees. Like, to make sure that before recruiting someone in the organization, that recruitment is authorized by management and those charged with governance. Then before paying employees, it is authorized and then signed. Then promotion is also authorized, and then dismissing employees, like, they are all authorized. So this will help, like, to avoid that thing of ghost workers, because someone can leave the organization. If it's not authorized, then their name will still remain in the books as an existing employee. So the organization is supposed to make sure that there is authorization of recruitment, remuneration, promotion, and then dismissal of employees. So how can the auditor test this? So here the auditor can review or inspect the board minutes and HR records. And HR records or files to see if there is proper authorization of recruitment, remuneration, promotion, and dismissal of employees. So that's how the auditor can test this kind of control. Then another control, there are very many controls. We can't finish all of them, but I just give you a hint. And you're not supposed to cram all of them, as I told you. When it comes to answering questions, the control that you come up with depends on the way the question is given. So another control is HR files are maintained for all employees. Like, to avoid that thing of ghost workers, like, you make sure that HR files are maintained for all employees. So how can the auditor test this? So the auditor can get a sample of starters, like the people who just entered the organization, and then leavers, and then check if the proper human resource files recorded about them. That's how the auditor can test this kind of control. Then a time clock is used to record the hours worked in case employees are paid per hour. A time clock should be used to record the hours worked or work done, like in case employees are paid per output. So work done should be supervised and recorded for each employee. So here the employee, like, what the auditor is supposed to do to test such kind, is supposed to review the time records. And see if hours worked by employees were properly recorded, and then to see if there was proper supervision. So these are the test of controls, and then these are the controls. That's the objective. The test of controls depend on the controls. You're not supposed to cram. Understand what you can. When you're answering a question, answers depend on the question. These are for understanding. So that is all about the occurrence assertion. We are going to the next assertion, which is completeness. So the second assertion is completeness. Completeness is making sure that everything that is supposed to be included is included. So here I said the objective is the same, you just keep changing the system. So here, to ensure that all payroll expenses are recorded for work done by the employees. That is completeness. Yeah. In the purchases system, we say to ensure that all purchases transactions are recorded. For sales, we say to ensure all sales and its adjustments are recorded. Yeah, that is completeness. So the objective is the same, you just keep changing the transaction system. So here, to ensure all payroll expenses are recorded for work done by employees. So what are the controls that management can put in place to ensure that all payroll expenses are recorded for work done by employees? That's what we are going to look at. So this is how management can make sure that all payroll expenses are recorded for work done by employees. So the first control that can be put in place is regular reconciliation of the human resource records and then the payroll. Like management should make sure that there is always regular reconciliation or comparing the human resource records and then the payroll documents to see if they are matching, and in case of any difference, that difference is investigated. So how can the auditor test this kind of control? So the auditor is supposed to just review. So the auditor is supposed to review whether there is regular reconciliation. To review whether there is regular reconciliation between the HR records and the payroll, and then select a sample of the records and then carry out reconciliation. That's how the auditor can test this kind of control. Then another control is regular reconciliation of payroll and employee costs that were recorded in the general ledger to see if they are matching. If there is any difference, that difference is investigated. Then what can the auditor do? Same thing. The auditor is just supposed to review and check whether there is regular reconciliation of payroll and employee costs recorded in the general ledger, and then select a sample and carry out reconciliation. That's what the auditor can do. Yeah, the test of control is based on the control. You just change something small. Then another control that can be put in place to achieve this is reconciliation of names and net pay on the payroll with those on the checks and then bank transfers, like to see if the money was sent to the right person, the right amount was sent, and all that. So reconciliation of names and net pay on the payroll with those on the check and then bank transfers. So how can the auditor test this kind of control? Same thing, the auditor is just supposed to review and see if there is regular reconciliation of names and net pay on the payroll with those on the check and then bank transfers, and then select a sample and carry out reconciliation. Yeah, so that is the assertion of completeness. Isn't auditing easy? So that is it. You just keep twisting things. You just twist the control, you come up with a test of control, stuff like that. No, there is no rocket science here. So the next assertion is accuracy. So the next assertion is accuracy. Yeah, accuracy, it's making sure that everything that is recorded is correct. Yeah, so here for the accuracy assertion, the objective is to ensure that gross pay, deductions, and net pay are computed and recorded correctly. Like as I told you, the objective for every assertion is the same. The objective for accuracy is the same. Like in the purchases system, we said to ensure that purchases are recorded correctly. Purchases transactions are recorded correctly. So you just keep changing these. So here we say to ensure gross pay, because here we have gross pay, net pay, and then deductions. So to ensure that gross pay, deductions, and net pay are computed and recorded correctly, that is accuracy. So what are the controls that can be put in place to ensure that these are recorded correctly? So the first control we have here is the control that can be used to ensure that there is accuracy. So independent verification of payroll calculations. Like independent verification, like you get someone else that didn't prepare or that didn't compute those calculations to go through and verify whether they are correct or not. So independent verification of payroll calculations and changes to the payroll master file. And the changes to the payroll master file are made because we said the master file records information about all the employees in the organization. So, and changes to the payroll master file by the internal audit before the payroll approval. So, how can the auditor test this kind of control? The auditor is just supposed to inspect so inspect and then you add all of this. The auditor is supposed to inspect whether there is independent verification of payroll calculations and changes to the payroll master file by internal audit before payroll approval. So that test of control is done. Yeah, the audit is just supposed to make sure that this is working properly. Yes, so inspect whether there is independent verification of payroll calculations. Yeah, stuff like that. So another control that can be put in place here. Is payroll costs are compared to the budget. Like you see what was actually spent on employees and then what was budgeted to be spent on employees. So you compare the two. Yeah, so payroll costs are compared to the budget by management for reasonableness to see if it makes sense or not. Yeah, so what is the auditor supposed to do to test such kind? The auditor is just supposed to review and confirm if there was a comparison between payroll costs and then the budget by management. Just that. So for the test of controls, I don't have to write it. You just twist this and make it a test of control. So there are very many others. Yeah, there are very many others. I can't give you all of them. Yeah, and you're not supposed to cram. We are here to understand. Yeah, so others can be like comparing the net pay and then the names on the payroll with those on the checks and then the bank transfers. Yeah, you compare that. You compare the net pay, not the names, because we are dealing with accuracy. Accuracy is about figures. So you compare the net pay on the payroll and then the net pay on the check and then bank transfers. Yeah. So that is accuracy. So let's go to the next assertion, which is classification. The last assertion The next assertion is cutoff. For classification, we are not going to deal with it because I already told you, like, the objective is the same, the control is the same, and the test of control is the same for all the transaction systems. So we don't have to deal with that again. So let's look at cutoff. So the next assertion we are looking at here is cutoff. Cutoff, as we said, is making sure that transactions are recorded in the correct accounting period. So here the objective is to ensure that payroll transactions are recorded in the correct accounting period. I'll repeat it again. The objectives are the same for every transaction in case they ask you to explain the objective of the cutoff assertion in the payroll system. It is to ensure that payroll transactions are recorded in the correct accounting period. In case they say purchases system, to ensure purchase transactions are recorded in the correct accounting period. Just keep changing this, the rest is the same. So what can the entity do to make sure that payroll transactions are recorded in the correct accounting period? So this is it. It's just one control we have here. Like all starters are those that are just entering the organization. Leavers, like those that have left the organization. All starters and leavers changes to salaries. All starters, leavers, then changes to salaries, and deductions are reported promptly to the payroll section, and then changes are made in the payroll master file promptly. Like in case there is any changes in payroll or in human resource, that change is reported immediately. In case someone new is recruited, they are supposed to report it to the payroll section so that they can be able to adjust the payroll. And then they are also supposed to report that change to the payroll master file, because it records everything about employees. Yes, so that will help to ensure that payroll transactions are recorded in the correct accounting period. Yes, so that is it. All starters, leavers, changes to salaries, and deductions are reported promptly to the payroll section, and then changes are made to the payroll master file. So what can the auditor do to test this kind of control? That's what we look at. The auditor is supposed to review, just reviewing the entity's procedures of reporting changes and perform a status or reverse test. So the auditor is supposed to look at the procedures of reporting changes, like do they report immediately or they take some time, and what's the process they go through. Then the auditor can perform a reverse test, like to check if like the date when that employee left the organization and when it was recorded in the files. Yeah, so that is all about the cutoff assertion. In case of any question, please ask. For classification is to make sure that the payroll transactions are classified properly into accounts. Yeah, the objective is the same as for the control and the test of controls are the same as for the sales and then purchases system. So that is it.